Well, the flash September PMI rose to 50.5 from 50.2 in August. That shows that Chinese manufacturing sector has stabilized in September, and that is good news. We saw stronger new orders, stronger export orders. All of these things are in line with the pattern we have been observing in the Chinese economy over the past few months. However, at the same time, domestic indicators such as employment indices as well as the price-up indices are still continuing to decline. So this shows that end demand is still quite weak, and domestic conditions are still quite sluggish. So we think that it's good news that the economy has stabilized for a month, but risk to growth is still probably on the downside. Well, firstly, I think it's worth bearing in mind that employment index is always a lagging indicator for the economy. So, for example, this could be as a reflection of the fact that the economy was doing relatively bad in August and also in the latter half of July. So, to that extent, we think that it is. This is not to say that the labor market condition is truly worsening. It might just be a reflection of the relatively bad data we've been getting over the past few months. But it is not deniable that I would think that the labor market condition has probably worsened a little bit since 2011, and that is a result of the fact that manufacturers are continuing to shed jobs, and they're citing a relatively low level of labor demand because they see a low level of demand coming through from their consumers. So we think the manufacturing sector as a whole is quite sluggish, and that is reflected in the employment data. Well, we think that they've actually done quite a lot this year. They've done a lot of infrastructure investment. The PBOC have also eased monetary policy. But so far from the data, it seems that that is not enough to put the economy on a sustainable path for growth. So as such, we think that given the cyclical pressure, the PBOC should still do more easing in the next few months. So by that we mean they could continue with quantitative injection, which they're currently doing, or they could still opt for a rate cut at some point this year. Well, we're still expecting 7.5% growth this year, and that is conditioned on additional policy easing from the central bank as well as from the government. We think that there are enough justification from economic data for them to do so. So that means that should they deliver next few months, we should still see growth rebounding a little bit in the fourth quarter of the year and finishing the year on around 7.5%.